Hey, hi friends, this is Nitish, founder of StockMock. Welcome to yet another episode of the podcast series that we have been doing for all of you guys. And thank you for giving such lovely response to all the videos. I hope we are adding some value through our podcast and our guests are delivering something that can be added to our trading journey. And and today I'm very excited to do this podcast because we have someone whom I got the chance to interact with in late 2019 when he was struggling to find some good systems and he was doing some 4 5 lots back then. And then now when I see him, he is doing confidently 15,000 quantities on expiry days and otherwise as well. And he's confident about his systems. He has seen some rough patches through his journey. He prefers to be low profile, but since he's my friend, I've requested him that your journey will definitely inspire a lot of us because we struggle through our systems. We struggle through a drawdown phase, and then we gain confidence slowly and gradually. So I'm sure that his journey is going to help us in many ways. That's why I've requested Hardik to come and speak about his journey so that we all can learn and get inspired from them. Hello, Hardik. Welcome.
Yeah, hello Nitish. It's a pleasure to be on your show.
Thank you so much, first of all, for accepting the invite. I know you are busy with your work, and I know it's late. I think it's 12:30 a.m. and you get
Yeah,
completely by 11 o'clock late night. So first of all, thank you for taking your time for this.
yeah, it's a pleasure, Nitish.
So firstly, please tell us about your background and then about your trading journey.
My family runs a FMCG business in Kerala. We are the super stockists for Marico and the dealers for Nirma for the entire state. So my family's been in the business for more than 30 years, I guess. My dad set it up in the early 90s. Yeah,
Oh, nice. Okay, please walk us through your uh, trading journey, how you started it, how you landed into this options trading thing, and what made you stick to the system.
my trading journey actually started way back around 2004. I was in college at the time, and I used to usually bunk college. I don't advise anyone to do that. And I used to go to the broker's office and try to learn and understand markets. Numbers have always fascinated me since my childhood. So it was obvious that when I grow up, I would be involved with numbers. I was really curious and enjoying doing numbers. Like wherever there were logical puzzles or be it mathematical challenges, I always like used to sign up for those. And so naturally it was a natural step of evolution, you can say, that from mathematics I progressed to stock markets. And it took a lot of time to figure out, okay, the stock market numbers are like a total different challenge than whatever logical puzzles we've been solving
Correct.
until then, because this involves human emotion, whereas logical questions and puzzles don't involve that. And it was a pretty rough journey. After starting, I think Sensex was around 3,400, 500 at that point, and we were pretty new, and we started doing delivery-based trades and shifted to intraday, and just kept buying the complete capital. We did not know
When did you
anything about
start
risk
doing this?
management at that point. Yeah,
When did you start doing this?
it was 2004. Yeah,
In
2004.
2000. Okay, yeah. Carry on.
Yeah. And then ultimately around 2005, I learned about monthly options. Monthly options had been there, I think, from 2001, but naturally someone in their first year straight away wouldn't know about that. The more deeper you know about markets, that's when the next step naturally involves progresses to the FNO section. So that's how I started getting to the FNO section. The futures lot size was outside my capital range, so the options was pretty reasonable. I mean, you could buy an option for 10,000 bucks at that time, 5,000 bucks. FNO required lakhs, so my capital wasn't that big. And I did some funny trades when I started out. I used to bet my half my bankroll or full bankroll in just a couple of monthly trades, and always buying call options on dips. And it was a very big bull market at the time, nothing which we have ever seen. In fact, the Sensex went from 3,000 to 21,000 over a period of 5 years, if you see from 2003 to 8. And I was involved in the markets at the time. And despite multiplying my money on a lot of occasions initially, always ended up losing whatever I gained because I did not have any sense of risk management. And that realization came at the very end of the bull market when I saw that the Sensex had returned around 5x and I had minus 300% in front of that. And that's after that, the 2008 recession started, and then the mother of all bear markets started. So at that point, I took a decision that I want to take this seriously because I took it as a challenge because see, I had a set business to look back to, so I could take the chance to pursue finance. So I decided to go to Australia to Royal Melbourne Institute of Technology in Melbourne, and that's why I pursued Master of Finance over there. So that was my next step, and because I'd blown my bankroll 3 times, I did not have capital to trade 2008, 9, and 10. So that was a very good learning curve to see how severe bear markets can be. For a person who's only seen bull markets, this was a very big learning curve.
Okay.
Yeah, and after that, after 2, 3 years in Australia, I started getting involved with the Australian and US markets because that was a natural progression from there. It was pretty easier to trade in those markets from being an Australian student. So yeah, I used to dabble with, and that time weekly options was available in US stocks, SPY. So I used to trade that a couple of times in and out. And gradually I got a grip of things. I did pretty okay with delivery based trades. But then still at the end of the year, I could see that I was lacking a systematic approach. I wasn't able to deliver the kind of returns because see, if you are in the markets, you need to be able to beat the index. If you're not beating the index consistently, it's a waste of your time. Then you'd rather just give your funds to a mutual fund manager to manage it. So that's when I decided around 2014 to come back to India because uh, my family business was there and my dad needed me to help him out with the expansion. So I decided to take a call, came back to India and thought let me start with the Indian markets again because right now I had 5, 6 years of experience to understanding finance. So again, I came back around 2014 and I started dabbling in the markets again. I think BJP had just come to power and another bull market had started. And I thought it's a pretty good time to be in the markets. But as per my expectations, things did not turn out as what I thought it would because then markets were flat again for a couple of years. Then you had the demonetization thing, and yeah, so a couple of years the markets went nowhere, and my delivery trades were all over the place. Just I was flat at break even at the end of 2016, and it's at some point in 2016, Bank Nifty weekly options were introduced, and now I had a peculiar relationship with options. So, and I did have the experience of SPY options, so it was natural that I would jump into this. And I figured out slowly that expiry days were lucrative to trade. But at the same time, if you're going to be trading whatever weekly options or monthly options, you needed a system. And I used to follow technical patterns and root tips and rumors still, even at that point. And even at the end of 2018, I thought that would be enough time for me to judge to see where I would start. I mean, where I would be in the markets. I still wasn't beating the index. I mean, you can say that I was in the market for a very long time and I was still not beating the index. And then I was almost in the phase of giving up. I thought let's just give it to the mutual fund managers and just be done with it. But and yeah, so I was around ready to take the decision, and still I kept a last ditch effort. I've spent so much time across all day that I thought, and started. At that point, you realize that if you want to be trading, you need a proper back-tested system to rely on. India was lacking the infrastructure. Indian retailers did not have an interface to backtest the ideas or to follow any proper system. I think you only had AmiBroke at that point where you had to download your data from somewhere and code your strategies, programming. It's not like feasible for the normal Indian retailer if they're having zero IT skills to know all this stuff. So I was one of those guys who could not figure out coding and IT, no matter how much I tried. Then came these learning Python and all that. I don't know. I couldn't just do it. I mean, it was computer ka coding nahi beta tha. And I was lucky at that time. By chance, in my constant googling of backtesting engines, I figured out StockMock. Came across StockMock website, and then I thought, let's give it a try. So, and then when I logged in initially and tried out the system, I thought what was this, like time-based stop losses? ऐसा कोई concept है? We've heard about technical indicators. We've talked about even geometry and physics patterns, and even what do you say, astronomy. I've heard about all that, but what is this time-based? Like कोई time-based stop loss लगा और trade करो. And the backtested results pretty impressive, I thought. I mean, चलो कुछ तो बात हो सकता है इसमें, चलो देखते हैं. And what I was still skeptical, ये तो fluke हो सकता है, ऐसा थोड़ी ना होता है कोई भी टाइम पे आके stop loss लगाओ, profit बना के जाओ. And what I saw, followed it for 1 year, the backtest results. I was still not ready to commit to real money yet because it's a new concept, right? And around 2020 COVID time, when I saw the markets were tanking like crazy, here was the system still delivering day after day. And that's when it piqued my attention. If I'm not doing this, I'm missing out on something. Instead of trying to question the system, why not follow it with risk management and see how it goes? So, but before committing real money, I had to get to know the process behind this, the people involved with it. So that's when I got in touch with Nitish and picked his brain and tried to find out कि ये कैसा होता है, ऐसा थोड़ी ना होता है, कैसे, how can you convince me to do this? And the reasoning given was simple कि what you're looking at works, just try it and figure it out your own way. Like, okay, I thought, okay, I'll do that. So I started with the 3-4 lots again initially in this weekly options at the end of the COVID crash. And in a couple of months, I did okay. But the point is, whatever gains I made, I tried to uh, increase my lot size too quickly. From 4, I went to 10 to 20 to 30. And then at the end of 4 months, I came back to where I started because then the drawdown phase started. See, system जो backtest results देता है, that's another story. And the another story is living those emotions in the live market. There's no replacement for that. So you have to start off initially. No matter how good the backtest looks, you will be under the pump a lot of times. And this concept of where one leg stop loss hits, I was not familiar with that. I was a delta neutral trader always. I always had a position open, call or put. दोनों मेरा कहीं ना कहीं hedge होता ही रहता था. So when one side stop used to have, I used to like pretty get tensed pretty quickly because your one leg is exposed and your MTM increases pretty fast after an initial spike which takes out a stop loss. And I was not used to these kind of wild fluctuations in MTM. And it took time to understand why this system works and why this risk management was important. And at the next phase, I learned the importance of risk management along with the system. So I followed strict risk management after the initial drawdown phase, and then I came to a conclusion why the best way to deal with these systems is to backtest a system which doesn't have more than 5% drawdown. Because if you have a system having 5% drawdown, and if you start trading it, you never know how good a system can be or how long it can last. But you can have a base as 3 times your stop loss as your mental stop loss for your entire capital. In case by any chance 3x of your back tested drawdown goes, that's why you pull the plug on the system. That's why you stop. So I think 15% is something which you can recoup. Even if you lose in a year by putting in some mutual fund or whatever later on, if you're not comfortable continuing system trading. So, but point is, if you do system trading, you have to know what you're getting into and calculate and measure your risk. So I got into that phase, understood that importance of risk management around 2020 end. And after that, I just started believing the system. I was able to ride through all the drawdowns of that only simply because I had a stop loss in mind of my drawdown. And no matter what, I was going to follow it. I was just going to follow it because itna cheez try kiya market mein, technical indicators, and now I have something which is working in front of me. So why not give it a full and proper chance? Itna saal experience hone ke baad bhi, I was then able to deliver whatever targets my backtested result shows when I started believing in whatever system I had. And then I started experimenting a bit with later on as I got experience with system trading by changing, by having different multiple time entries throughout the day. One entry is to be early and one in the noon. So that this way my drawdown used to reduce, because what happened on many days is two side stop losses get hit initially, and then the premiums are lying threadbare. And Wednesdays and Thursdays, the premiums are excellent for decay, and if you miss those opportunities, it's a big opportunity gone. So what these re-entries at later time slot is, they help me be in the market to take advantage of whatever premium was remaining. So now this started adding to my gains, and I started doing this consistently. Most important, I kept my risk in check. So because of that, I was able to face in and compound my trade size every few weeks. And what happened is, slowly I started growing, and now I'm in a position where I'm trading good quantity. solely due to the reason because I chose to believe my system.
Nice. Yeah, it's really inspiring journey that you started since 2004. You again
Yeah.
did a stint in 2009, then came back to India in 2014 to join your business. And I'm assuming that since 2014, you're also running your family business as well.
Yeah, I'm running my family business too at the same time. Yeah.
Okay, so you're doing a full-time business there, and you are
Yeah.
focusing on. You were struggling with systems back then,
Yeah. I
and
was struggling with systems.
you're struggling to find systems. And then I think in late 2020, early 2020,
Yeah.
you decide to give the time-based stuff a chance, and then you
Yeah.
carried along with it till now.
Yeah.
That's really
Yeah.
amazing. Just for our
Yeah.
users, I'll tell you, Hardik is a guy who is very curious. That's what I've understood. Like, that's what I know. Because the day he got in touch with me, he was curious about so many questions. And I remember since late 2019 or early 2020, when we interacted first time, bro, since then, every week, at least he messages or calls me once to discuss either ideas, to discuss about his strategies, the way he's approaching it. And the week that I don't get his message, I generally message him saying that, bro, everything is okay. Message नहीं आया तुम्हारा आज, सब सही चल रहा है.
Yeah. Yeah.
And
Yeah.
and such things happen, and he's true. He's true and honest guy. Like he throws away lots of ideas at me. That whenever he hears a story of somebody, like one day I remember he was hearing some Saurabh Sisodia, great guy, story, and he came that Saurabh Sisodia shared this idea, and I want to share that this thing can be implemented in stock market. Let's try it out. Like his hunger for learning, even though like he's just for all of your information, his family business is very big, and but his curiosity to learn the markets, to go deeper into this markets, and being low profile, it's admirable. So I'm sure this is great journey. And with 3-4 lots, if I'm not wrong, I think you did last week when I called you up, you were doing some 15,000 quantities, I think.
Yeah. Yeah. 15 to 17,000 on expiry day. Last week was the volume.
How
Yeah.
good it feels when you see now your journey, and you see that, no, it was so tough time when I was managing not even 3-4 lots, and now we're doing 15,000 quantities with confidence. See, it's
Yes.
it's not it's not about just throwing away lots. It's about throwing away lots with confidence.
Yeah, see, the point is, I got to a comfortable zone, which was lacking for 10 years. It was lacking for 10 to 12 years. But once you get to the spot, you just know, okay, you are in the zone. You have to capitalize on it. Because, see, whatever capital I had at my disposal, I kept generating returns for the guys who were invested with me, my family, my friends. And so, of course, if you deliver, people are going to come back and want more of the piece. So this is what happened with me. It's not that I didn't have to approach anyone for anything. Just naturally people just came and they told, okay, handle this, handle that. And yeah, it's something which just came naturally to me. This is not कि मैंने decide किया था कि मैं इतना 15,000 trade करूंगा या 20,000. It just happened. And after 15-20 lots, it got pretty difficult to handle this kind of volume. So that's when I started picking your brain, and you suggested me to go algo, and that's how I got someone to code algo for me. So now algo takes care of my execution. But that's another point. You still have to monitor your position despite being an algo, because you have such a big trade book going on, and anything can happen with the broker's API, and NSE could be down anytime. So you got to just manage watching the algo. That's pretty easy actually, monitoring the algo than executing so many lots.
Right, right. We see, Hardik, though, that your learnings, your struggle to find a good systems, but when you find a system, and we'll talk about that as well, what is the process that you have followed, and if you can share some insights that
Yeah, yeah,
what to look into the strategy. But before that, let's say you have found a system
yeah.
X that you are trading with 3-4 lots, and now you're doing some big quantities. What are the learnings that you can share with us, and what are the mistakes that you have done while scaling up the system? The reason I'm asking is this: when somebody is trying a system
Yeah.
and that is working for them in the live markets, they generally scale it up very quickly. And then when the drawdown happens, it's very difficult because those guys have not seen the phase of losses, series of losses, and the drawdowns. So how
Yeah.
was it like that to gain the confidence and scale it up to such a big quantity?
Yeah, see, the thing with option selling is usually you have pretty high strike rate. I think around the mid 70s or early 70s would be a strike rate. So you are used to the zone of winning. Your winning streaks are large. And so when suddenly a wave of drawdown hits you, initially you shrug it off, you think, because you already are in good profit and you think it's okay, it's not a natural hai. But then when things go southwards, it does go southward and the losses start piling up pretty quickly, and you start questioning the system. You start thinking up, ye nahi chal raha hai, wo nahi chal raha hai. The mistakes which I made initially is I stopped trusting the system which I had. That my whatever my system DD was, say my backtested system I ensured was 5% initially. The system hit 7% and I backed out of it because thinking my historical DD was hit, so let me move out of the system. I stopped trading it, and that was after I started scaling aggressively. So you can see that when I look back, I wasted 4 months of my time initially. I can't say wasted now because that was my biggest lesson. At that point, I thought I wasted time, but now when I look back at it, it was the biggest lesson. When I stood back from the market for a couple of weeks, it just took 2 weeks for the drawdown to recover, and I was not in the market at the time, because at 7% मेरा DD हो गया, मैं निकल जाता हूँ. I think you need to give ample space for your drawdown. 5% अगर drawdown होता है, you just wait until it hits 15% before striking off the system, because you need to give room to everything. Because see, you don't want to enter a zone where everything is curve fitted. You have to understand whatever the backtest will not necessarily be the same in the future. So you have to give it some more room to express itself. So that's the mistake I made initially, that I did not trust the system. The point is, when you backtest the system, you try to understand your logic, why it's working. If you understand that logic, you see that nothing has changed actually. It's just that sometimes the market's volatility is higher. That's why your drawdown increased at that point. The premium side, as the premiums price increase, of course your drawdown is going to increase. So that understanding I did not have initially. So as weeks progressed after that, when I saw my drawdown was recouped, that's when I went back to my system, because I thought, chalo, now everything looks okay. And that's when I made up my mind ki my whatever historical drawdown of 5% was initially, I'll give it room up to 15%. If it hits that, then I'll stop trading it. And the point is, in option selling, you can make this 40-50% in a year if you follow, even if you follow risk management. But the point is, even if you lose 15% from that, you're still in a profit. So I thought, what's there to lose? All I need to do is just follow my risk management. And if I have to take a hit in the future, I'll take the hit. I'm pretty confident if I follow risk management and the system, I will be at least in a profit. At least I'll beat the returns. So that was my logic at that point. And so what happened is, I just started following that mindset. I start trying to split up my entry times as well, so that I have a lower drawdown. And that's a returns kept generating after that. And there were drawdowns too, to the point of again 7-8%. Nothing thankfully has hit 15% again. But I choose to keep the faith. As long as 15% is not, it's a good thing. So why do you want to tweak a good thing? Let it run.
I see. Hardik, you've spoken about, just give me a second. Yeah, you have spoken about systems, and you are talking about having a system which is having less than 5% of a drawdown. So is it possible you can show us a system that what do you do? Need not show it exactly what you do, but you can give us a rough idea that this is what I do. This is how the drawdown should be. And you can screen share and you can show that if possible.
Yeah, there's a system I'm working on right now for high wicks. I consider 23 as high wicks. Everyone might have their own definitions, but this is my definition. And I think we are entering in a high wicks zone, looking at the recent volatility, NASDAQ, and all these tech stocks have been getting crushed. We might be in for volatile times. So I design my systems to have separate strategies for separate wicks. I don't think one shoe can fit all kind of strategies in option selling. Different environments, different days have different strategies. That's my understanding of the markets, at least. And there are certain days where I wouldn't want to trade in, because based on the thousands of backtests I've run, I found out that Friday is one of the most difficult days to be trading. In fact, there's not much expectancy in most of my systems, so I just avoid trading Fridays. So this is just an example, and I'll just show you what I'm working on right now. So maybe it might help the users a bit.
Sure. You can screen share, please. Yeah, you can see the screen.
This is one system I am working on. You can see the first system I'm taken is an inverse triangle. Okay, it's the reverse of a normal triangle, where I'm selling one strike lower for the call and one strike higher for the put. I'm keeping a 30% SL, and I'm trailing the stop loss 20-15. because every 20% the price moves in my direction, the stop loss will move up 15%. Because see, I am going to be trading this in a high wick zone. I want to keep my losses small, and in high wick zones, the big and large moves come. You want to lose small, but you want to win big in those environments. That's the reason for selecting this kind of stops. I'll be starting at 9:18. I think 3 minutes is an ample time for allowing the markets to settle down, and I'll be closing before 3 because 3 o'clock volatility is just off the charts most days.
So this is
And I'll be
strategy.
clubbing it with the
If you
system.
can, if you can please share that again. Click on the edit button
Yeah,
for strategy here. So this is a high VIX strategy, which is high VIX means for you it is more than 23, correct?
yeah,
And this is an inverted triangle. Inverted means ATM minus 100 call, that is ITM call, and ITM put, ATM plus 100 put. The stop loss is simple, but you are trailing 20%, 15% for our users. We can say for every
yeah,
20% in profits, TSL 2015 means for every 20% in profit, we'll trail the stop loss by 15%. So if our call
right.
was 100 rupees and it goes from 100 to 80 rupees, 20% profit, and the stop loss is 130, it will move to 150. Okay, and you enter like on the first 5 minutes itself, 9:18, and you go till 3
Yeah,
o'clock. Okay, yeah, this is
right.
perfect.
Yeah,
Nice.
and I'll be clubbing it with another system at 11 because in case the trailing stop losses can hit pretty easily
Right,
in a high volatile market. So you
right.
need to ensure that you have arsenal to enter again. And that's when I'll be entering at 11:15 another range breakout strategy. But here I'll be only targeting the at the money options,
Okay, okay.
and I'll be having a 50-point stop loss for each. Remember, this is not a percentage. This is just a point. It's a
Point.
50-point stop loss. And whatever the price of the at the money will be between 11 and 11:15 based on the high and low form, the system will be taking the trade.
Nice.
Clear?
So
Yeah,
the
so
first
this will have the
strategy,
same ending time.
the first strategy starts at 9:18, and the
Yeah,
second strategy starts after 11:15.
right.
Oh,
Yeah,
okay, cool.
yeah,
But both of them exits before 3 o'clock, 2:59.
yeah, both of them exist before 3 o'clock.
Understood.
And I won't be trading Fridays as I explained. If you I've backtested thousands of systems and I found it pointless trading on a Friday. So
Okay,
if data backs it up, I'm not going to argue with it.
okay, understood.
Yeah, and here I'm going to run the test. See, I've chosen Feb 2019 as my start date, and initially we'll be getting the results for all weeks, and that's why I'll be filtering the results to high weeks because the concept, as I've shared, is only to capitalize on the high weeks.
Understood. Yeah, so the results are here.
Yeah, this is the first system where you have a profit of 828
Oh,
for the 918 inverted triangle
nice.
and a profit of 685 per day for the 11:15 range breakout. And you can see the combined average profit is 1507 and with a max DD of 18,000, which has a reasonable amount of days as MDD, and you can see a decent expectancy of 0.612. Now remember, this is for all the weeks, and I'm going to filter to just high weeks because my logic, as you might have understood, is only to capitalize on big moves. That's why I've chosen inverted and breakout strategies.
Okay, by the way, this is not even that bad for all days as well, as I can see.
Yeah, it's not that bad. And you can see the profit is almost doubled when
Oh,
I've changed the filter to 23 weeks. And you can see the expectancy has increased to 0.84, another 40% increase in expectancy. And you can see
oh,
max drawdown is only for 2 days. And yeah, the sample size is also pretty decent. You have 160 days of VIX data to look back into. So it's not like something which is just being tested on 10 or 20 days. I think 100 is a reasonable sample size if you're looking at options.
true, 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 true.
Yeah.
If you can
And
show
I'll give
the,
you another idea is
yeah,
if
yeah,
you
yeah.
want to further increase the system returns, what you could do is on Thursdays you could buy OTM hedges and you could trade double the quantity because Thursdays are the best days to actually be trading options. I'm pretty sure everyone knows that.
How do you
And you can
decide
see,
that Thursdays are the best days? Like,
yeah, and you can see now the expectancy has shot up a bit further as well as the day's profits to 3056. So
okay,
yeah, I'd leave the users to play around with the system. So probably it would help them in developing their systems.
of course, of course, of course. Um, when you say your Thursdays are the best days, how do you decide that? How do you choose that?
It's simple. You just run. I mean, if you run at least 1,000 backtests, you just compare all the data in all the systems. You'll see that Thursday has an expectancy of more than double of any other day. Most
Ah,
of the systems which I have running on Thursdays have expectancy of more than 1.2 or 1.4. So,
okay,
and all the other weekdays are coming up to zero point 0.7 if you club Monday, Tuesday, Wednesday too.
understood.
So it's just a natural phenomenon which is happening because options have to go to zero on a Thursday, and
Of
the
course.
premiums are pretty good. And based on your stop, you will get a decent expectancy based on how
Mhm.
small stop you place and what times you enter the market.
I see. Hardik, can you please show the results again?
Yeah, sure. The combined results are here.
Yes. No, if we remove the hedges, we just want to see without hedges, what does it?
Okay, I mean without the extra Thursday, you mean?
Yeah, without the extra Thursday.
All
And
right,
this
right,
Thursday
sure.
just for FYI for our users.
Yeah, that's just
And
for FYI. I mean that's the way you could capitalize.
so what Hardik
This
has
is the
done
normal.
for Thursday, he has bought the hedges so that he can buy double the quantities because Thursdays are high expectancy days that you can earn more. Okay, so for this system, you have an expectancy of 0.84, which is not bad at all because this results by default includes 0.5% inbuilt slippages. Yeah, so you can scroll down a little bit.
Yeah.
Okay. And by the way, when you are saying that we are doing one lot, are we assuming that we are doing one lot with 2 lakhs of
Yeah,
capital?
one lot for 2 lakhs. So this would come to around 7% of drawdown, 14,000. So which is pretty reasonable, I guess, for a high weeks
No, no, this is for 2 lots
environment.
now because ultimately we are
Yeah,
doing
yeah, sorry, it's for 2 lots. So it's pretty 3.5%. Yeah,
like less than 5%. Yes. And
yeah,
best part is that you can recover your MDD in 2 days.
yeah,
Another good thing that I like about this system is the win rate is consistent between S1 and S2.
yeah.
So if you can also show the correlation metrics of this, just scroll down a little bit. Scroll down. Yeah, it's 0.18, which is decent. Yeah, that's okay.
Yeah.
That's okay. Yeah, I that's thank you for showing the system. You can
Yeah,
see
look at the month-wise breakdown. You can see there are some pretty flat months. The losses are small, not much. But when you cash in, look at those big months. So this is what we are targeting. The big gains.
okay, I see. Because this
And being
strategy
in a drawdown for
is
just 2 days doesn't means that you're not like pumped a lot. You're just under the drawdown just very few times. So it's an easy system to be with.
this is for high VIX environment only when we are trading with
Yeah, yeah,
more than 23. That's great. That's
more
great.
than 23. Yeah,
The VIX is more than 23. Okay,
yeah,
great. Uh, Thank you, Hardik, for showing your systems. It's for the high VIX environment systems, and I can clearly see that not all the months are winning months, but when you win, you are winning really big. So that's really cool. But as you rightly said, Hardik, that uh, backtesting is kind of just seeing something on paper, but
yeah.
emotions
Right.
are real different. So I want to
Yeah,
talk especially about the drawdown emotions. How does it feel
yeah,
like when you see this happening the first time? I know there are two kinds of emotions that I see people go through. One is the
yeah,
drawdown that they face first time. It's a
yeah,
different emotion, and when
yeah.
they have scaled up and the drawdown then happens, it's a different feeling. And I am
Yeah.
sure you must have gone through both.
Yeah, I've definitely gone through both. In fact, I could say I've gone through 3 to 4 phases of 4 phases, and one just being very recently, which thankfully last Thursday bailed us all out.
Yes.
Yeah, so I'll talk about the first one initially. First one is for the first time is that's the hardest one. Because these emotions are new. Norman Wells, a German psychologist, wrote a trading book in around 2012 where he conducted an experiment where he had a backtested system of 20 years having a 95% strike rate. He chose 120 people to trade it, and he taught them the system how to trade it. And out of them, at the end of the next 1 year, only one person followed the system diligently, and he was the only person who made a profit.
Oh,
So it's good that I have read a lot about this psychology, the skills, the importance of psychology, because I had the experience in the market. I had this information. What is the biggest challenge in market? It's not system building. It is psychology. So that psychology is the only thing that can help you in a drawdown phase. Nothing else can help you because everywhere you look around, usually I think most of the system sellers in options face a drawdown at the same time, because somewhere the stop loss is all connected somewhere, and the market movements are erratic at certain phases due to different reasons every time. So this understanding helped me keep the only person who made a profit out of 120 was the person who followed the system. So that gave me some sort of hope, ki by drawdown was there. I'm pretty sure the guy who was profitable at the end of 1 year, he too had a drawdown. And so I tried to read his literature and try to figure out ki why this guy was successful, not the others. And what I've understood is this guy rode throughout the drawdown, having faith in the system. Is difficult, yeah, but you need to have convince your mind, ki this thing works and it has worked in the past. Until it really shows me it stopped working, follow it.
Mm.
So the first time it was difficult, but in fact I chickened out as well the first time, as I told you initially that I मेरा drawdown थोड़ा exceed हो गया था, मैं निकल गया था, but the recovery was fast. It just took 2 weeks to recover. So that's when I decided कि if this is the situation, I'm going to follow the system. So you first drawdown say what happens after you chicken out helps you in the second drawdown phase, because you know कि ये पहले हुआ है. And then during the second drawdown, when the trade size is big, up to a certain extent, it's bearable. But then again, because the amount of money you're losing is 5x or 4x more because your trade size is that much bigger. And then again, it starts affecting you. Yeah, it's a pretty difficult phase to be in. Then again, you have to come back to the basics. That's the only simple thing. I wake up every morning. I always argue with myself कि भाई system नहीं follow करना है, stop loss ही लगना है. But then something in me comes out कि नहीं भाई system को follow करो. You've seen it in the past कि system निकल गया drawdown से. So why you ring the alarm bells necessarily? Loss होएगा तो होएगा भाई. See, and another very important thing is having a proper source of income apart from trading. Now that is my hidden uh, reason, which I would say would really help me during drawdown phase, because I know कि this is not my bread and butter. You should not make trading your number one bread and butter initially until you get experience at least. So if you have your salary or your business income sorted, then it's not that difficult to go through this, because ultimately you know how much you're going to lose even if the drawdown hits. कितना तक जाएगी? If you're going to follow your stop losses with discipline, तेरा 5x का DD 15 तक जाएगा, बंद करो फिर. So this is what gave me confidence कि I knew where I could stop forever in case the system was going to up. So yeah, so this is what helped me, having consistent income and past experiences. में देखा जब system follow नहीं करते तो क्या होता है. So third time this guided me, fourth time as well this guided me.
Nice. This is nice. And when I did the podcast with logical trader Pawan and conservative trader Anand, both of them
Yeah.
said the same thing, that
Right.
when you are in the drawdown phases and your only source of income is trading,
Yeah,
personally,
that it gets very difficult. Logic goes out of the window then.
your
Because
life
very
is
important is rational thinking and understanding reality. That's the hardest part. If you can understand reality only when you have proper logic mindset, and if you get that affected, then it's very difficult in a drawdown phase. So that's why I suggest everyone to have a proper source of income. If you're getting into trading, just don't rely on it, at least initially, until you learn the ropes for at least 3-4 years.
yes, until your psychology is in place, which means your
Yeah,
drawdown
and
is
it's
not
yeah,
impacting your day-to-day activities. Until
right.
you have a different another source of
Yeah,
income. You
yeah.
rightly said this. You also talked a lot about risk management as well. Can you please throw some light
Yeah.
on risk management, position sizing? How do you see position sizing when you're trading such big quantities?
Yeah. Risk management is something actually SEBI has taken care of nowadays for retailers, where you're introducing stricter margins. I remember 2010, I could sell a hell lot of options for 2 lakhs. I could sell 10 lots even, I guess, with my broker. Now I can only sell one for 2 lakhs. That's a different thing. But yeah, you can say that ultimately the current structure by SEBI is perfect for risk management. If you're following stop loss based systems, I don't know about positional or other things, but I can only talk about my system and stop loss based systems. So this is perfect. 2 lakhs fake lot is perfect, because any strategy backtest you run in StockMock, whatever figure you get, you just compare the drawdown with 2 lakhs and say, bus itna percentage hi mera drawdown hai. It's good. So one lot per 2 lakhs is the perfect lot size initially. And yeah, the point is whatever the system shows, as you get experience, you'll find newer and newer ways to improve your returns and lower the drawdowns. And this is what I would say newcomers is 2 lakhs, 1 lot is perfect. You don't need to do anything more than that. And it took a while to figure that out. Probably once you get into aggressive drawdowns initially, you'll understand key why your drawdown is exceeding the system drawdown, because you're selling more than you need to. And 1.8 lakh is the margin for one straddle. It has always been. It's only that brokers now can't allow giving more margin. Initially, even when you could sell 10 lots, 1.8 was the normal SEBI norm. So that you need to understand why it's 1.8 lakh. So yeah, it's perfect for risk management, for intraday. It's perfect.
Nice, nice, nice. And how do you size your positions?
Yes, position sizing is just come directly relative to this thing, the number of lots you can sell. Whatever I could sell for, suppose I have 20 lakhs, I'll sell 10 lots. And the thing is, there's another way to improve your position sizing is, see, different days have different expectancies in option selling. And Monday has a different rate of decay, Tuesday has a different rate of decay, Wednesday has a different rate, Thursday has the best rate. And you can always see that Monday is more of a momentum day, where because the market is closed for 2 days and it's like the market is trying to catch up for whatever activities has happened over the weekend. So you'll always realize that the market moves a lot faster and the slippages are slightly higher on Mondays. But so when the markets move fast, I want to be trading a lower quantity. Actually, I wouldn't want to trade 100% of my capital on that day. I would rather just trade 75 to 80% of it. And Tuesday too, I wouldn't want to trade 100% of it, because Tuesdays is a day where it's neither momentum nor decay. At least Monday you have momentum. Momentum can help your options at least reduce in price when one side stop loss hits. Tuesday is neither here nor there, but some sort of decay do come after an IV spike. So I would even say 70-80% of my capital I would trade on Tuesday. But Wednesday is when things start getting interesting for us option sellers. The decay is high, so that's the day I would deploy 100% of my capital. And most exciting day is definitely Thursday, because if we all know the price has to go to zero, and most of the backtest systems will show the highest expectancy. And this is a day where you actually just don't want to put 100% up, where you want to capitalize a bit too, because your drawdowns are not too large. If you backtest your data, you will find out that your drawdown are pretty small when using small stops, at least on Thursday. And that's a day where I buy usually OTM hedges. It's kind of my secret sauce, that I go double X quantity. I go slow on Mondays and Tuesdays. I go bit aggressive on Wednesdays, but I go pretty aggressive on Thursdays, because I know I'm going to get off if I'm wrong. And I know what my backtested drawdown is on a Thursday. So let me capitalize on it. I buy OTM hedges initially, and I do 2x of the normal weekday size on Thursdays. So this is how I scale up my return. This is how I scaled up my returns.
Nice. Okay. Hardik, when you said based upon, because your strategy has a different expectancy on different days, and when on Thursday you see a higher expectancy thing, you bet bigger on that day. This I think this also is called as some concept, na? Kevin's position size.
Kelly criterion is called.
Kelly criterion. Yeah.
So the concept is simple. It says that on highest expectancy days, you should be betting the max capital possible, following risk management in place.
Okay, Kelly's criterion. So I would encourage our users to, if they have not looked at it, do look at it. If it helps them in the position sizing, that's great. Okay, so I'll talk one very interesting thing. I've not asked you earlier. I want to ask you on this podcast. You have ample of knowledge. I know that. I've talked to you a lot of times. Your trading size is also big. Why do you prefer to be low profile on social media? I think this is your first ever interaction interview.
Yeah. This is the first time I've ever come face to face on any.
And I have to force you a lot of time for this.
See, I'm not part of any Telegram group or Twitter group, or I don't follow much Twitter gurus and all this, because usually I find most of this not something which at least helped me, like everyone, not to put down anyone, it just hasn't helped me. I just found my own way, because I trust in my process only. I wouldn't want to follow anyone else's footsteps on that. And the lot of unwanted noise, right, which causes clutter. It affects your mind. When you're going into trade, you need to just know your system. You should know the news around you, which is coming out in case there's some big announcement or something only then. And yeah, you should be switching off all these TV channels and gossip mongers and Twitter and Telegram and following nonsense tips and all this, because you have backtested an X amount of time. This data too has gone through all this kind of clutter and noise. That clutter was there that time, and the clutter is there even now, and the clutter is going to be in the future. So the point is, why you want to unnecessarily take extra burden? You already have a big challenge when your drawdown starts. Why you want to necessarily pollute it with other kind of information? Your backtest has done that for you, so this should be your only source when you're going to trading. This was what I discovered, you can say, after 10 years. Or it's a natural impetus that I had to go through this structure before learning and realizing that to be successful, it's very important to shut all the noise off. Just follow your system. 100 people have 100 opinions, but the point is, when you're on drawdown, is that bugger going to come and sort you out? No, you are on your own. So if you're on your own, follow the system which has got you there and trust it.
Nice, man. Nice point of view. Yes, it's a distraction. It's a noise. It can hinder people, hinder opinions. Very true.
Yeah, just
Uh,
follow your own voice, because that will ultimately take your destination where you want to be. Your self faith, self belief, which I lacked early on, I say was the second most development from my trading career after psychology. Self confidence, it only comes from positive psychology. Faith in yourself, yeah, that's the most important part.
nice, nice, nice. Thank you, Hardik, for sharing lots of insights with us. Before winding it up, can you throw some light on for our users who are just starting this journey? What are the steps they should follow? Do's and don'ts, kind of some in small
Yeah.
way that
See,
can
yeah,
help.
it's a very important thing to have this kind of advice for newcomers, because see, initially when I started, we did not have all these kind of podcasts. At least in India, YouTube was not even there in 2004. No system was available to backtest your ideas. Nothing was there, so it was a very hard learning curve. If I had these tools way back when I started my career, my whole process would have been different. I would have been a different pedestal right now. So it's very important for newcomers to know initially that trade systems based on data, on based on backtests which you can see, which has a thorough logical reasoning for its performance. And risk management is very important. Don't try to make 10 ka 40 in 1 year. Don't target that. First try to make 10 ka 13, 10 ka 14. When you go through that process, you know how bloody hard it is to make 10 ka 13, 10 ka 14. And that's when you realize कि भाई this is the right path. 10 ka 30, 10 ka 14 कुछ भी अच्छा है, बहुत अच्छा है. So when you go through that process, only then you'll know that. So give yourself time, to get used to the real life trading experience compared to the backtest. That's pretty important, because backtest shows something else, but going through the emotions, it's a whole different story. And this is what a backtest can't show you. You can only know it for yourself by being live in the market. So don't be in a hurry to make money initially. First, understand the process, and 1 month, 2 months is still not enough. Give yourself 6 months to 1 year. Follow your system. It's right through the troughs and bottoms. Understand the process, and then after 1 year, you take a call. Ki, bhai, is it something which I want to be aggressive in or not? If and based on what you will witness in a period of 1 year, ki, the proper risk management is already set in place by SEBI, by the margin requirement. You don't need to overdo it. Just follow it and follow the systems. And in 1 year, you'll know कि you'll be in a good place to decide for yourself कि भाई मैं जो कर रहा हूँ इसके आगे मैं क्या करूँ, because you've gone through the whole waves, all the market fluctuations and different kind of patterns and all that. So don't be in a hurry. That's my first advice and most important advice. Take it slow your first year, and at the end of 1 year, definitely you'll be a much better trader, and you will know your own path from there.
Very, it's aptly put. Uh, I just recalled when one of my friends, Mohit, got introduced to this options world, and when he was backtesting something and he found a really good strategy, he was so excited. This is a story I could recall right now, that he told me that yaar itna acha returns hai, I'll just take a money from bank, I'll take a loan at 12% and it is giving me some 80% kind of thing. I'm gonna get rich. I said, you have not seen the drawdown phase. You have not seen anything in real world. Loss hurts you. just for me, give yourself 4 months. And I'm telling you, after 4 months, he said, no, I'll do one lot only until I'm getting much comfortable with this. So
Yeah.
going slow and facing really those emotions, it's
Yeah.
very hard. Secondly, it's very hard because when you are in loss, you feel, you go to social media platforms, you see
Yeah.
that everyone else is in profit. So going
Yeah.
through those phases is crucial for every trader, and every successful trader has gone through this.
Yeah.
Passing the stage is so important, no?
See, everyone's journey is different. The viewer should and will understand that whatever MTM screenshots you see in Twitter should not, like, you should not compare yourself with those positions, because your system is definitely different than whatever XYZ has posted. And you will understand that once you realize that once you trade on your own, you will realize that the days where you will make money, XYZ won't be making money.
Nice, nice. That's very true. Thank you, Hardik, for coming so late. I know it's around 1:30 right now
Yeah.
at night. Thank you so much for doing it. I enjoyed it thoroughly. I hope we have added some value for our users.
Yeah, sure. I hope the viewers benefited from this, and they gain confidence which they need in this kind of option selling environment.
Yes, definitely. It will take some time, but such kind of interactions are very necessary with real traders, so they get to know that this is where they are going to land up in future, and this is what their
Yeah,
journey has been, and we'll also go through that. So thank you
yeah,
so much. Thank you so much for doing it.
yeah.
So
Thank you, Nitish.
thank you so much for listening this far. I hope we have added some value. If we did, if Hardik did, I know he's a low profile guy, but I'll add his Twitter profile in a description. Do follow that, and do share it with your friends if you think this can add value. And if you are new to our channel and if you have not subscribed to our YouTube channel, I'm going to get upset. So please do follow us, do share these videos with others, and happy backtesting. Thank you so much. Bye bye.